Fed Chair Jay Powell held rates steady. We had 10 straight hikes over 15 months, but signaled more rate hikes are likely this year. For more on this, let's bring in former Dallas Fed President Richard Fisher. He's now a senior advisor to Barclays and a CNBC contributor. Richard, thanks for joining us. Kind of having your cake and eat. It's an overused expression, but there's something for everyone. There was a pause after 10 straight. Okay, so there is a potential for sitting back and letting things play out if there is a lag. But then again, for those people that think we need firm resolve in fighting inflation, there were the commentary about 2 more additional hikes. So is it good to try to be everything to all people at the same time?
Well, first of all, I agree with the decision that was made. There is no surprise there whatsoever. The key thing, Ben Bernanke used to say, and I think he's right, it's not just what you do here at the FOMC, it's what you say. And I think he said all the right things. Especially important was reaffirming the sanctity of the 2% target. And unless they feel they're getting there, they're going to continue to hold tight monetary policy. And if it gets possibly worse, then they have plotted out on the dot plot that they might raise 2 more times. But Joe, I like to say I'm a retired dot. I was a dot for as long as I was there after Ben Bernanke created the exercise. It's not a forecast. It's how you feel at the time. And I wouldn't put too much weight on that. I know the markets did immediately after they were released. But the key thing is what Powell said. And let me add, too, I watched his body language. He didn't look at his notes once. He's very confident with what he's saying. And I think that's an important signal to the marketplace. They're going to wait. They're going to see. We've got a lot of refinancing coming up here. We've also been getting some statements like Morgan Stanley yesterday saying they're not going to do any more commercial real estate new transactions. I think that's what they said. So we have to see what comes due, what matures. Rates are higher, obviously. We're in the 5s. The thing that I also would comment on, the 10 years beginning to move. Got all the way down in April to 3.3%. And now it's back up over 3.8. I wouldn't be surprised to see the rate increases move out the yield curve. That has implications for mortgages and for a lot of other financing. So I think they've done the right thing. I would have advocated, could have argued either side. I would have advocated for a pause. And then for him to say what he said, answering the questions especially, none of the questions, by the way, were surprising. He was firm. He said the right things. And they are totally devoted to getting back to that 2% target. To me, that was the most important part of the press conference.
We're down 50% in the core. Pretty good. Tell me if I'm wrong about this, Richard. And it's weird because, everything's political, and I think it's weird that a lot of people on what I consider the other side, the left side of the aisle, are very strident about further rate increases. Which almost makes me think that they're arguing that we did spend too much money, and that this is a result of debasing the currency. When I'm looking at it, and I'm not blaming that. I think it was the pandemic, and that when we reopened, all these things are happening now in the job market and the supply chain, but things are coming back to normal. And how long did we have those permanently low inflation rates? How long did Japan have it? How do we know we're not headed back to what used to be normal? And 5% will be plenty high and normalized for rates. How do we know that? Why do all these people think that, like the same people that wanted to spend all the money now think we got a huge inflation problem because they've engendered all this inflation? Are they admitting it?
I don't hear that coming from that side of the aisle, but I don't care.
What do you hear?
Well, basically, if you listen to Elizabeth Warren, who's way over
Jason Furman, I can get Roger Ferguson. Everybody wants to, thinks inflation is much worse, and I don't know where they think it's coming from.
What do you think? Roger is a serious person, and he's a former vice chair.
Serious people. I'm not saying he's not serious. I'm serious,
So,
but I have my
Joe,
opinion.
It doesn't matter what these people think. The Fed has a duty. It was reiterated firmly yesterday. And as far as the politics is concerned, there is no political sensitivity at the FOMC, period. I never heard in 10 years any discussion of that.
But here's you don't want to derail the economy if we're headed back to 2% anyway. If we're headed back to normal place anyway, you don't deliberately want to put people out of work to get to 4.5% or 5%.
We have high employment, the highest employment in ever. So this business about derailing the economy or going into a deep recession, if we're going to go into a recession, it's way, way out there. And again, that was reiterated yesterday. Look at the employment numbers. Take African-American women, for example. Highest employment in at least 20 years and probably in history. Highest employment, not unemployment. So every demographic category is fully employed. That gives the Fed a lot of room to sit here, hold, and very importantly, and this was addressed in the press conference, they're going to continue to reduce the balance sheet at a time when the Treasury is issuing over $1 trillion in debt to build up the capital account. To me, that doesn't indicate in any way, shape, or form that they're assisting this process. Right. It's the Congress and fiscal policy that has to be corrected, and I hope they start getting that done.